Information and emotion in price action. That's the topic of this week's Stockscores Market Minutes for October 1st, 2012. A reminder to subscribe to my YouTube channel at youtube.com/stockscores.com, where you spell out the .com. And also to subscribe to my free weekly newsletter at newsletters.asp. There, the address on the screen. All right, let's get into this week's topic. Price can change because of either new information or emotion. Now, emotional price change tends to be temporary, while information will change the price trend for a stock, for a market, that sort of thing. How you take advantage of these two motivating factors for price change is different, and we need to understand so that we can trade them properly. Now, let's look at a chart of the S&P 500 to drive home this point. You can see that over the last, and by the way, this is a 1-month chart of the S&P 500 going back through the month of September. And over about the last 2 weeks, we've seen price drifting lower. The direction of the trend implies that the market's perception of fundamental value for the market is getting worse, and that's why we've seen prices fall back. Along the way, we've had little rallies, little falls in price, and those are the emotional reactions to the fundamental move. So anytime you get a little bit of a rally in this downward trend, well, that's caused by greed. People thinking that, maybe prices deserve to go higher. But because they don't break the downward trend, it's really a case that the fundamentals have not changed. It's just some emotion around those fundamentals. Now, we've also had periods where price falls too quickly. Fear takes over, pushes price down too fast, and that emotion eventually corrects out of the market as we get a bounce from the bottom extreme of the channel. Now, in this case, we actually had the bottom of the channel penetrated on a couple of occasions, but eventually price came back into the channel. The lesson is that if you are a short-term trader, you can look at the trend of the market and then either short the market at the top of the channel or buy the market or the stock at the bottom of the channel, and that's worked quite well. Now, I always look for a confirming signal at the extreme boundary of the channel so that, for example, on September 26th, when price really fell through the bottom of the channel, I would wait for some sign that the market was going to bounce before I'd buy that. Because if you bought at the channel boundary, obviously it didn't work very well. But notice also that there wasn't really any sign of strength at that boundary, and that's something to keep in mind. So, to summarize, use the trend of the market to define the fundamentals, and use the oscillations within the trend to define the emotion of the market. All right, let's get into the analysis of the S&P 500. We are in an upward trend. We've been that way since the start of June. We are at the bottom of the channel, which means price should bounce. We've seen on a number of occasions that that has happened. However, if we got a break of the trend line here, we would say that the fundamentals have changed, or at least the market's perception of fundamentals have changed. And so we want to be real careful with the market here. I do think that the market is going to bounce from this support level, but if it doesn't, then we want to be very cautious, or at least be thinking about shorting the market because the trend is reversing. The TSX is also in an upward trend, hasn't been as long, really only started late in July, and it's been a lot more volatile, which means there's a lot more uncertainty. The trend in the TSX has been driven by the weakening of the US dollar, which improves the value of commodities like gold, oil, silver, that sort of thing, and that has helped. But this market is still not a real strong market. It's certainly improving, however. The Russell 2000, which is the small caps, has been trending higher since June, but not with the same pace as the larger cap stocks. And I think what's happening is money is moving into large cap dividend paying stocks, and it is only now starting to look at the smaller cap sector, where it's buying some of the companies that maybe have the potential to move a lot better, a little less boring than the dividend paying stocks, but we're not seeing the real strong trend in that sector yet, although it is improving. TLT, which is the Treasuries, has risen up to the top of its downward sloping channel, so it should break lower, and this would be supportive for stocks because money will be coming out of Treasuries and presumably into the stock market. So again, this chart says it should go lower in the near term, and that should help stocks, but if we break to the upside of this red line, then that implies that people are looking to hide from risk, money move out of stocks and into Treasuries. US dollar is in a downward trend. It's coming back to the upward trend line, which is to be expected. My thought is we'll probably see it come up a little farther, get stuck at that downward trend line, roll over. That will be supportive for stocks and commodities. So the theme here, everything is pointing towards a continuation of the rally. But of course, when you're at trend lines, there's always a risk of trend reversal. Gold is breaking through some long-term resistance and should start to move higher from here as we have made that break, but it hasn't been really a strong break yet. So again, watch for that US dollar to soften, and that'll help gold and other precious metals. Oil held up at the downward trend line. It has got some short-term support at the green line I've drawn, but I don't really think the oil chart looks all that strong right now. So I am optimistic on US, Canadian stocks, gold optimistic, oil neutral. I think uncertainty is increasing. We've seen an increase in volatility lately, but the trend in stocks and gold remains up. There is a potential for a break of the trend, and these markets should therefore be watched closely for this bearish signal. Well, that has been the Stockscores Market Minutes for October 1st, 2012. Have a great week in the market and trade well.